If you're thinking of buying a home, you probably heard that mortgage rates are rising and have wondered, what does this mean for you? Well, since mortgage rates have increased over 2 percentage points this year, it's natural that you're going to think about how this impacts your homeownership plans. Let's talk about it. So today, buyers are reacting in one of two ways. They're either making the decision to buy immediately, or they're waiting off to hold and see if in fact things level off or soften. Let's look at some context to help us understand why so many buyers are on the fence and why so many are jumping, even in this current market, to make a purchase. I think it's really important that you look at historical context to understand where we've come from and how this impacts you today. One factor that is important is the average 30-year fixed rate and how rates are still comparatively low compared to what we've seen over the recorded history of interest rates. Mark Fleming, chief economist at First American, explains it like this, and I love this, so pay attention to this specific direction. Historical context is important. An average 30-year fixed rate mortgage of 5.5% is still well below the historical average of nearly 8%. When we look at the broader context of data, our current rates are really competitive compared to what we've seen over decades. If you're deciding whether now is the right time to make a purchase or not, history would suggest that this is still a very good time to take advantage of these historically low rates. Now, a look ahead. What happens if rates climb even higher? Well, buyers who are springing into action are motivated now because they know that rates have risen steadily and they're eager to get ahead of any additional increases. Yes, you've heard that correctly. There's lots of discussion that rates will climb even more. When rates climb, it impacts the affordability because your affordability is two pieces. It's the interest rate and it's the purchase price. If in fact rates climb further, that will deepen the impact on your affordability. Let's look at what the experts say. Odetta Kushi, deputy chief economist at First American, explains it this way. Ongoing inflationary pressure remains likely to push mortgage rates even higher in the months to come. Most mortgage professionals are expecting an increase in rates, which will certainly impact your affordability. So if you've been thinking about a time to take advantage of the market, it might be a really good time to do so, especially considering where the rates are right now. Nadia Evangelou, senior economist at the National Association of Realtors, says, with even higher interest rates on the horizon, I don't see any reason to hold off on purchasing a home right now. If you feel financially secure, you should start looking for a home today. At the end of the day, there's no perfect advice on when to buy a home. It depends on your goals, your finances, your personal situation. But I think it's important that you don't get debilitated by the headlines of rising interest rates and you look at the historical context to understand how competitive the rates are actually today compared to where they've come from. If you're on the fence about whether you should buy or wait for a better deal, buying sooner than later might be wise. I mean, bottom line, rising mortgage interest rates are motivating many buyers to take advantage of the market right now before they rise any further. If you've been interested in exploring what this market means for you, reach out to us so we can help you navigate this really wild ride and help you understand the options so you feel best secure in your decision.